Hello, my name is Chris Zingo, and it is with great pleasure that I host our 2021 Finastra Lending Strategy. This lending session will detail the vision for our global lending strategy at Finastra and detail how Finastra is becoming a systemically important orchestrator of lending services in the market, facilitating the expansion of capital at scale into the communities in which our clients serve. In this session, I will discuss our end-to-end lending capabilities, including loan origination, loan syndication, and loan servicing. Now, let me first begin with our mission. Our mission is to unlock the power of people and businesses everywhere. We will do so by becoming the industry's premier orchestrator of open finance. By orchestrating open finance, we will help to democratize financial services for all, resulting in the extension of capital into the leaf nodes of our communities, from the largest multinational corporations around the world to a single sole proprietorship to an individual saving for tuition. Now, our strategy to carry out this mission is grounded on three guiding principles. The first being empowerment and financial inclusion. How can we enable the expansion of capital into every corner of our society? Transformation. How can we break the status quo by leveraging technology innovation and our role in the financial ecosystem to unlock value for our clients not previously realized? And finally, connection through marketplaces. A new way of operating. How can we enable new business models, new customer journeys, and leverage our global network to connect our clients in ways that allow them to solve problems that they cannot solve by themselves? And the global lending theater is a prime area for us to empower, transform, and connect, because we deliver solutions that are closely linked to critical elements of our client's supply chain, required to extend capital at scale. Now, this is an interesting time for financial institutions, where the pace of change is accelerating like Moore's Law on steroids. The competitive landscape is evolving rapidly. Technology innovation is changing the economic model for banks and disintermediating significant parts of the traditional bank supply chain. Now, where is the disruption occurring in lending? The U.S. mortgage market. The Greenlighting Institute published a study in August illustrating that fintech lenders now write 66% of all U.S. mortgages. The credit markets. New adjudication techniques and credit modeling have expanded access to credit among the underbanked and subprime customers. Customer expectations. We call it the consumerization of commercial technology, and it has established an expectation among our commercial clients for seamless digital experiences, digital origination, and rapid adjudication. The economic model. Fintech operates with a very different economic model, built on a platform of decentralized asset ownership and a marginal cost to transact near zero. Now, contrast that with the traditional financial institutions who are burdened with high non-interest expense base and a high variable cost to transact due to disparate channel-based operating models, plagued with non-standard processes and manual inefficiencies, trapped data sitting dormant in the bowels of stovepipe technology stacks, and high regulatory overhead, and minimal discretionary spend to innovate. Now, there's a light at the end of the tunnel. As we all know, most challenges are merely opportunities in disguise. There is a new way forward for traditional institutions, and it begins with the financial ecosystem and open platform innovation. At Finastra, our mantra is collaborate to innovate. We recognize that 90% of our innovation will come from outside our walls. The current pace of technology innovation suggests that no one can keep up with the pace of technology evolution without the force multiplier of the ecosystem. That is why Finastra now offers the open flexibility of Fusion Fabric.Cloud, built on Microsoft's Azure cloud platform. Operating as a cloud-based marketplace, Fusion Fabric.Cloud invites innovation by allowing third parties to develop products alongside Finastra's new offerings. This approach accelerates innovation, boosting the effectiveness of our own core capabilities, but the real advantages belong to the institutions. For example, the technology we use to digitize paper documents into standard data models was not developed by Finastra. It was simply consumed. The technology that we use for our fraud monitoring and sanction screening was not developed by Finastra. It was consumed. By opening up our business services to the broader financial ecosystem, we have exponentially accelerated the pace of our innovation and shortened our time to market. Now, this innovation directly benefits our clients. By orchestrating our clients' business services and data with our broader financial ecosystem on the cloud, we provide them with optionality. Optionality to pivot to new revenue models, to transform their customers' banking experience and unlock new value in the form of embedded finance, embedding financial capabilities into the ecosystem of their customers directly. By connecting our clients with the broader financial ecosystem, we are able to expand our clients' reach beyond the communities that they serve today. We help our clients optimize their use of balance sheet to free up capital. We lower their cost structure, and we innovate how they engage their customers. For example, in global loan syndication, we service 76% of the world's syndicated debt on our platform, LoanIQ. Our innovation and critical mass in this area allows us to connect agent, lender, and investor digitally on the cloud, creating the potential to eliminate $346 million of costs from the industry alone, helping to drive the cost of capital down in the market. In the U.S. banking system, we automate the production and execution of over 6 million commercial and consumer loans per year. Our unique position in the market and critical mass of customers in the United States helped us pivot quickly to support U.S. Payroll Protection Program. During that time, we onboarded 575 SBA lenders with our PPP solution and facilitated the digital execution of over 150,000 PPP loans in under 2 weeks. Many of those loans going to underserved communities throughout America. In the regulatory landscape, we are heavily connected into the governing bodies and industry associations. When massive changes are imposed on our markets, we are able to lead industry change. We were the first loan servicing platform to launch the innovative alternative rate reform capabilities in our lending and global market solutions, not only preserving regulatory compliance mandates for our clients, but also providing them with a critical competitive advantage in the market, as allowing them to be the first movers with respect to originating and participating in SOFR-based loans. One of the most compelling opportunities in financial services, however, brought on by technology innovation, is the opportunity to reimagine capital allocation and redefine the value we create for our customers in the form of financial inclusion, environmental responsibility, and sustainable finance. At Finastra, we place social responsibility at the heart of our culture, bringing people and technology together through financial inclusion, social innovation, and our environmental mission. In February 2021, Climate First Bank is the first U.S.-based community bank founded on fighting climate crisis. By partnering with Finastra, they were able to digitize the launch of their new solar loan program. Today, available in our Fusion Platform App Store, is a suite of environmental, social, and governance capabilities that our clients can consume to drive their ESG agenda. Among the 150 applications on our platform today, we have focused on ESG solutions, such as managing climate risk factors in the bank's balance sheet with our partners at GreedPoint Global. Optimization analytics to keep businesses performing during significant uncertainty with our partners Straterix, DTEC, and Bank BI. Providing e-wallet capabilities in emerging economies to drive inclusion with our partners at Modafin and Dinero Cash. So how else are we using technology to support ESG? Digitization and automation of bank processes. We've been able to automate many end-to-end processes to drive efficiency and reduce the need for physical contracts and paper statements. Digitalization. The pandemic has forced people to work from home and manage their daily lives over digital devices. Through cloud-based solution, there are flexibility to commute less, reduce business travel, and reduce our carbon footprint. The acceleration to cloud. Microsoft Azure is a carbon neutral cloud platform, and today, 78% renewable. And the goal is to be 100% renewable by 2025. Now, Finastra has been expanding our offerings with Microsoft Azure. Finastra Managed Services are helping legacy solution in lending to migrate to the cloud and become carbon neutral. We are also investing heavily in financial inclusion. With our innovation in trade finance, we've launched TradeCom, where we are working with the International Chamber of Commerce, the ICC, in a strategic initiative to tackle the growing trade finance gap. This initiative will unlock $1.5 trillion of the trade finance gap, providing SMEs with greater access to short-term capital. But at our core, what is most important to us is the success of our clients. How our clients use our innovation to create value is the most rewarding part of our mandate. We are also proud to be supported by Jason, CIO of Seattle Bank, who partnered with Finastra to accelerate their innovation agenda to unlock value for their clients. Now, I had the opportunity to sit down with Jason, and we're excited to share his story with you today. Welcome, Jason. Thank you for joining me today. I'm thrilled that you're taking time to talk about some of the points that I've made before, but more importantly, to discuss your innovation agenda with us. I've spoken about the importance of innovation, whether it's driven on the basis of regulatory compliance or the need to become more competitive in our markets. So the first question I have for you is, what is driving your innovation agenda, and why is it important to you?
For us at Seattle Bank, we cater to a specific niche right now. And so what that is we cater to the high net worth, ultra high net worth as a small commercial bank with a single location in downtown Seattle. And so, we don't get a lot of foot traffic or any of that kind of stuff. So we need to meet our clients where they're at, which is digital. And, that's on their devices, in their businesses, whatever that looks like. And so for us, we have, specific needs that our clients have. That we just couldn't bring to market with some of the other core providers. And so Finastra gives us that opportunity. We're looking at, meeting those client expectations and then also going into new markets. Right now we're focused at one niche, but we would like to maybe do more of a regional, national play down the road. And we believe that there's definitely opportunities with the solution to do that down the road and do it at speed and at scale.
Well, I'm thrilled that you've decided to choose to partner with us to deploy such solutions. Question: given the newness and given the unknowns about the future potential of such solutions, how do you get a business case funded, and how do you allocate capital to deploy these solutions at pace?
For us, really that comes down to client and user experience, and then meeting a need either through a feature or a product. And so for us, that's where we start. We start with the client need, what the client expectations are, what they need in the market, what's going to help them with their business or whatever that is. And so that's where we start. And then we're a bank, and so we're risk managers at the end of the day. And so risk also comes into that. What's this new feature or product going to bring as far as risk to the bank? So user experience, risk. And then we model out, the perceived need based on either internal and external data points. So we'll model that out, to see if it makes sense as a business to bring that to market. And then also, what others in the market are doing to make sure that this also is kind of in line with some of that. And so that's kind of how we look at bringing stuff to the business units. Usually the business units are kind of bringing stuff to IT. Actually, they are the ones that are out, with their feet on the street, and they're meeting the clients, and they're the ones that are coming to us with the asks. And so we just, get those asks, on a piece of paper or whatever that looks like, and then we discuss, which ones are going to be the high priority versus low priority, and what that timeline is going to look like.
It's often said that financial institutions, banks, are essentially becoming technology companies with a banking license. How do you compete for resources and R&D capacity to fuel your innovation agenda?
Being a $700 million bank, we're pretty small. And in the U.S. market, the North American market, a lot of times in the past, having your own developers in-house and that kind of stuff came with a lot of other oversight and regulation. So for the most part right now, and in our competitive landscape being in Seattle with all the tech here, it's very hard to find the talent because they're very expensive. But so what we do is we really lean on our partners. So we lean on the vendor partner relationships, and that's where we're going to get the biggest bang for our buck is the technology. So the technology really has to help us or enable us to build things at scale and fast. And that's why we really believe in kind of like the Fusion Fabric marketplace. We're all in on that. We really believe that's the way forward. So we utilize, contractors for the stuff we do today. Down the road, we will build out a dev shop internally, but right now we don't do that. We use our vendors and contractors to do the work currently, and Fusion Fabric enables us to do that.
But I have one final question for you, and it's really simple. Why did you choose Finastra?
At the end of the day, Chris, it was really about partnership. So we started looking at a core provider about three years ago. And really at that time, the driving factor was user experience, just like it is today. It wasn't moving quite as fast. COVID hadn't quite hit yet. So things were moving at a slower pace, but we did see the need to improve the user experience, especially with our niche banking. And we couldn't do that with our existing core. And so with Finastra, we were able to do that. And the pace of innovation in the market today, it is just so fast. And even more importantly, I think the client expectations, they seem to be trending like Moore's law these days. And so really to keep pace, we needed a solution that we could actually go out and do things, that we could bring in devs in-house and we could start building ourselves to provide the features and functionality that we needed for our clients, since we do have that kind of niche market. And we just couldn't get the traction with our existing core providers. So providing relevant products and services was really a key factor for us. I would also just say, most people know that Seattle Bank was part of the Googleplex project. And that recently was mothballed by Google, and which was very unfortunate. But through that process, it really absolutely reinforced to Seattle Bank and senior management that Finastra was the right choice for us a few years back. The work that they did throughout that project was amazing. And so that partnership has been really critical. And that, like I say, it really reinforced that partnership going through that project. So even though the outcome wasn't what we wanted, it really brought the teams together and really showed us the value of the partnership.
Thank you so much, Jason, for your contribution today on the panel. But moreover, thank you for your partnership and trust in Finastra to drive your innovation agenda. You make this entire strategy come to life, because our mission is to empower you to empower your clients to succeed. So thank you so much for that. So in summary, this rapid pace of change and industry transformation is truly an opportunity. It's an opportunity for us all to unlock financial services in a very different way and create value in a very different way. By orchestrating open finance, we at Finastra will help our clients democratize financial services for all, resulting in the extension of capital into the leaf nodes of our communities. Through our guiding principles, we aim to empower and drive financial inclusion. We will support industry transformation by leading the pace of technology innovation. And we will solve problems that our clients cannot solve themselves by connecting them through marketplaces. By focusing on these three guiding principles, we will provide our clients with optionality. Optionality to pivot to new business models and/or revenue opportunities. Optionality to create customer value in very different ways. And optionality to drive down their cost structure so they can operate with scale and unlock new potential for themselves and their clients. So, if you're looking to optimize balance sheet to free up capital to lend, if you're looking to extend lending capabilities into communities that you're not touching today, if you're looking to drive your cost structure down, Finastra, through our accelerated cloud agenda and open platform technology, are here to be your orchestrator of open finance and lending.